if you were to advise a college student interested in investing and they have limited knowledge, what would be, the first thing that you would tell them to do, or what would be your recommendation to learn, I guess, on like learning and how to better yourself and gain knowledge?
Well, the first thing I'd suggest to them to do is open a brokerage account, but I wouldn't ask them to open it at Robinhood. I would ask them to open the account at maybe Interactive Brokers or TD Ameritrade, E-Trade, one of those discount brokers. Robinhood is too much like a video game, so that might defeat the purpose. And I would say that the great thing about investing now with all these platforms is they've gone to commission-free trading, which means that even if you had $100 or $1,000 or $10,000, you can get started. The frictional cost is zero, basically. So first, I'd open the brokerage account. And the second is that I would do research into different businesses. And I would make myself aware of what Buffett called the 20 punch card. What Buffett says is that if investors thought of themselves as having, this punch card where you could punch it 20 times in your lifetime. And when you punch it for the 20th time, that's your last punch, which means, in effect, what he's saying is you get to make 20 stock picks in your whole life. Okay, now that's a very extreme view. But if you knew that you only had 20 picks that you could make over the next, say, 70 years, then you open the brokerage account and you start doing analysis of different businesses. So you start with businesses that you're familiar with, businesses whose products you use. You might be a user of Apple or Android, which means Alphabet, and you might use a certain paint company's products, and you might wear certain clothing, and use certain products for cooking or whatever. So you're using all kinds of products in your everyday life. So you're clearly familiar with the company's products. And for you to have chosen that company's products as what you're using already clears a pretty high bar, because most things that we encounter, we're not going to consume. And then I would just say, study those businesses to see which ones make sense and such. And then when you study the businesses, there are different tools. You could read the Berkshire Hathaway letters going all the way back. All the annual meetings are now on CNBC. They've archived them. I think buffett.cnbc.com. And then you've got the different biographies on Buffett and Charlie. You've got a book called Poor Charlie's Almanac. So there's a lot of data to consume. And in the brokerage account, I would hope that you don't have a portfolio of more than 3 stocks. So first of all, you've only got 20 picks for 70 years. So you can't blow them all in. You can't blow 10 in 1 year. So, maybe pick 1 or 2 or 3 stocks that you have extreme high conviction about, and then take it from there. But you need a brokerage account so that it's real. And so the gains and losses are real. It wouldn't be the same doing it in Excel.